Sam Shakespeare coming to you live. How's everyone doing today? Happy Friday on cable. Let's see what it does now. Is our main level has broken up a little bit. From 28 to 32, it's kind of broken up. So in the middle is like 28, 29. The box is at 32. L7 is at 28. You got to pick your poison on that. And just remember, we're at the 5-minute box after a 5-minute lower low. So this 5-minute line is going to be pretty strong. It's just you can enter without confirmation, which means just entering now because it's there, but it's still, the action is up. The candle is straight up. We're at the top of that candle, in fact, which means the market's being bought. We're at this moment. I'm not saying it's not in a downtrend. It's certainly in a downtrend. Okay, no question. But right now, it looks like it's pulling back. And how far is it going to pull back before the trend continues? That's what I'm talking about, the pullback. So that pullback is happening. We're at the top of the candle. So yeah, we would expect it to turn over at some point. We're in a downtrend. There's no sign this downtrend is over. In fact, pullbacks are natural in downtrends. Natural. So we can't think a pullback means the end of a trend. It does not. It just means we're pulling back. So you have to assume with a probability that this is going to turn over at some point because we're still in a downtrend with no sign that the trend is over. So we would start thinking this is a probable point it could happen. You might say, okay, well, we've maybe had a couple bites, of this cherry, but so you might be cautious and wait. You may not get in on a one-click entry right here because we're a little, we're still a few band shades away from our L7 even. We've moved a bit. We're not even overbought yet on our stochastic, which we're close now. But you can see this candle just closed at the top of the candle. That's never a time to go short when the previous candle closed at the top of the candle. See, that usually means it's not done going up yet when it closes at the top. Means it closed in the middle of an up move. Right as it was moving up, the candle closed. So that's, it's normally a candle that closes at the top or the bottom of in other words, the close and the high or the close and the low are the same, then chances are the next candle is going to continue. Chances are, and that's why if you have a daily or an hourly or 4-hour, or a big time frame candle like that closes in one direction, not a bad little decider for what direction of trade you're looking for. All right, we're at a lower low, but we are moving up at the moment. Now, sometimes what a not bad thing to do in a situation like this would be is to enter a manual trade with a 5-minute candle dynamic entry. You might say, look, I like this area. Somewhere in this area, I want to be short. But where? How about the next time a 5-minute candle closes bearish and it breaks below that candle, I want to get in. Okay, that's obviously the definition of a dynamic entry. And maybe 5-minute candles, or maybe it's a 15-minute chart. That's a lot of waiting. You have to wait 4 or 5 candles. You're going to wait an hour, hour and a half watching the market. Or what you can do, and I think I might just do it for this right now, is go to my expert advisors tab for my manual trade. All right, manual trade settings, dynamic entry. Let's go to a 5-minute candle, right? It's got a 20 pip stop on it. Is that okay? Yes, it's fine. All right, 25 target, that's fine. I mean, I can even go a little higher just because it ain't going to matter, because what it's going to do is after 20 pips, it's going to take me out at the next slow car anywhere. Where would that be? Oh, after 20. Depends on where it gets in, but it may be this level that takes me out. Or, oh, the next thing, unless I change this to a 2-column roadblock. We'll see. It's Friday. I'm not expecting to get a massive trade out of this right now. I've got it set to Trade Protector 1 and Trail Stop 1. I think I'm going to disable the trail stop for now. All right, I'll go ahead and do this. So what I'm going to do is, look, it's moving up, no question. But if I get a full 5-minute bearish candle and a break below that, I would think that, maybe we can get some pips out of this. All right. So I'm going to sell it. But remember, I'm on dynamic entry, manual trade short ready. See that? All right. So that means if we look at our experts tab, you can see here, waiting for 5-minute bear candle close. I think I might do a thing where that information is displayed here. I'd have to make this panel a little larger. I don't want to make it too large because we cut into our real estate for the grids. But basically then what this is going to do is wait for a 5-minute candle to close bearish, and I can always swipe this at any moment and get out of the idea. If something changes and it just goes straight up, or something happens and I don't like it anymore, I can always just swipe it, and that erases the idea. All right, so, and that's the good thing about a dynamic entry, is you got time to think about it. But, you know, you risk that you don't get as good of an entry as just getting in, but sometimes you actually get a better entry, because when someone gives one click and it's going straight up, it continues to go straight up, you might get a higher entry, and we might get a higher entry right now, or maybe this becomes our bearish entry and we have to enter lower. Either way, at least we made sure the price was moving in the direction of our trade before we entered, and that's going to save you a lot of stress on jumping in front of a falling knife, or jumping in front of a train. I think I mixed up some sayings there. But catching a falling knife and stepping in front of a train, two things you don't want to do. All right, so right now, VTA looking for an entry on cable short. I almost would do it on pound yen too, but I don't want to double up if, so we'll see what happens with pound yen. I like them both. I think either one could work. In fact, probably maybe the yen, even probably better chance of going short, just because of what the yen crosses have been doing, and the yen crosses are also at resistance. If those all hold, then probably pound yen will be the one that moves a little further and faster. I mean, I could always cut down my risk level, do a half position or half size position. But we'll just stick with the pound dollar for now, and we'll just kind of watch pound yen and learn from it at the same time. If you're doing demo and you want to take them both, by all means go for it. Just understand, by doing that, you can see these grids look very similar, which means they're kind of somewhat in lockstep. So you'll either win them together or lose them together. You're not likely hedging yourself when you do both of them. There's not really much of a hedge. It's just you would be, in case you're not sure what way dollar yen's going to go. But in this case, dollar yen's just kind of stuck in one spot. So pound dollar and pound yen are not going to vary from each other that much. So in that case, there's no reason on doubling up. If you really want to be in both, then maybe do half positions in each one. Or what you can do is go put a position on one and then wait. And then if it goes negative, you could always, instead of adding to the one position, you could put a little on the other. So just some ideas, some ramblings on ways to approach it. But that being said, we are starting to get a little bearish action. So maybe we get an entry here. This 5-minute candle, we still have about 2.5 minutes for this bearish candle to close. So since that's the case, we'll sit tight for a minute. Okay, 15 seconds, this candle is going to close. So yeah, we may very well get an entry very soon. If this closes bearish, which it could in the next 5 seconds, and then the future price action breaks below it, let's see. Yeah, we're in. Okay. So here we go. We can see over here, it entered us at 19 short as the candle started turning over. All right, now here's our triad, these three. So what would we like to see? We'd like to see, for pound dollar to go down, we'd like to see pound yen go down, right? Because the pound weakness would make pound yen go down. Pound weakness would also make pound dollar go down. So any pound yen going down, that most likely could give us a hand, unless of course it went down because pound yen and dollar yen were going down together. That would signify a yen driven move, and we don't have yen in it. Now, however, if dollar yen goes up, which it's starting to, and pound yen stays put, then that is an example of dollar strength, dollar yen going up. So that would help us too, because dollar strength would actually help to push this pair down, pound dollar down, which is what we're in. So a perfect storm, the best case scenario for us would be pound yen down at the same time dollar yen up. That would mean strictly, if pound yen down and dollar yen up, means basically pound is weaker than yen, And yen at the same time is weaker than dollar. So that means pound would be the weakest, dollar would be the strongest, and should send ours down, which is exactly what we want. Now I just want to see what my trade management is set at. So the manual trade protector, I have it is set at trade protector 1. So we'll see what those settings are. The scale out and trailing stops disabled right now. Oh, let's go to see what the trade protector 1 is set at. Okay, so that's after 10 pips positive, it'll give us a move the stop to +5. It'd be perfect because if we get to the low at 08, that's about +11. So that'll be just enough getting to the low to get our trade protector in. And then if it breaks the low, we'll have to see. All right, let's go. We're approaching break even. Euro yen's pushing a little bit lower. Let's go, trend. Let's kick in. All right, let's go. Now it'd be nice. We're getting looks like we could get a bearish engulfing candle. If we get this to close down at the low, it's a good sign. It's a really good sign for going lower. All right, about 30 seconds for a candle close here. All right, we got that candle close right at the bottom of the candle. That's exactly what we want to see. There's no guarantee of future price action, of course, but that's a pretty good sign. Love to see dollar yen higher, pound yen lower. Let's go. Trying to push these lows. It's about at +7. There's no reason to get out of the trade yet. I mean, the price action is still doing what we want it to do. We're coming up to the low, however. That's one issue. But here we go, +9. Come on. Push, pound dollar. Get in. If you get into lower lows, we're making pips. Here's +10, 11, 12, 13. There you go. Come on. I mean, if it happens quick, I mean, the VTA will take us out. But we got to get into some lower lows here. It's trying 13, +13. I mean, we're pushing those lows. If pound yen gets into lower lows, forget about it. All right, let's take it. All right, I'm out. 12 pips, 12.3 pips out. All right, good deal. I mean, I think it could still go, but it's Friday, and oh, Fred took 8.5. Very good, awesome. All right, Wendy +12.